you're doing well. You had a nice weekend. We're back to work again Monday, the 19th of September. We've got FOMC this week, so all eyes on FOMC. We've got a quiet day calendar-wise, which is quite good, and we've got a bank holiday in the UK because of the Queen's funeral. So I think pretty much all the UK are going to be focusing on that because no one's going to work. We've got limited infrastructure, travel, trains and buses and things like that. So everyone's at home, and so it might impact London Open. Normally we see a lot of volatility at London Open. We might see a little bit less than normal because obviously the bankers and the dealers, they're all at home and just chilling at home. So we'll have to wait and see what happens at London Open. It might be a typical Open, or it might just be really subdued because of the bank holiday. Now, the thing is with the risk calculation is that we flipped the risk off again. So we knew this would happen because of the 24-hour difference was quite large, I think on Wednesday, Thursday, and there's a big shift. And when there's a big shift on the 24-hour difference and that impacts the big picture, be careful if VIX goes above 26.5 because then it's just going to add to the risk-off theme. Okay, so just bear that in mind. One thing about the bubble right now is that the Aussie bubble's there. Now, for risk-off, the Aussie bubble doesn't really belong down there, so it's going to be a bit of a mismatch of the Aussie, just so you know. Okay, so they've gone one particular way. They've shorted the Aussie, which makes sense because it looks like we're risk-off. However, we like to use the contrarian logic. So if they short it, we should be, we should be buying it. So there's a mismatch with fundamentals and the sentiment of the Aussie. So you've got to be careful, okay? Normally, what you'd want to be buying dollar, the USD, if we're risk off. Okay, you wouldn't necessarily would want to be buying the Australian dollar if we're risk off. And check your indices chart as well, which I can show you. So it might be payday for Aussie. All right, so be careful there. So it's a kind of annoying that they're not matching the fundamentals and the sentiment, but they can't match perfectly all the time. It would be like too much to ask. The yields are pretty out of whack. Coming down would be sort of USD weakness. However, we had the 6-month surge a lot, the most in fact, and the 30-year surged as well. So there's a bit of a mixed picture there. Yield curve is out of bonk, very out of bonk. You can see how this has developed over time. We've been following these videos. We were fairly serene, and it was quite, in ascension, and now we've just gone really curved right now. So you can see how these are like bumping up higher, and if they continue, we'll probably get a stronger dollar. If they come down, we'll probably get a weaker dollar. So keep an eye on these. Lots of shifting, which helps, or so we say, which hurt our risk calculation. So they've gone long, EJ, GU, German 30, S&P, UK 100, US 30. So they've gone long, all of those. Because they've gone long, we should be selling them. Do note EJ is a mismatch. However, we were quite extreme last Monday, and we've come off extremes, you see. And dollar is very strong. Okay, so that's that in a nutshell. There isn't anything to be said there. You can see how strong it is. NU is the weakest and dollar CAD is the strongest. Look at this UC, look at the dollar CAD sentiment, and then you understand why that's going up. This is going to be fine, I think. Little caveat with the, the location of the Aussie bubble. It might be a good trade, but we'd have to be careful. All right, just be careful because that doesn't make sense there because we're risk off, unless of course we change for New York. If we go risk on for New York, then that does make sense, the Aussie bubble, because it's strong buy. So that's that. You need to subscribe if you want to see the trade of the day. There's the link there. You can just memorize that if you're just watching the YouTube video. Quasidb, Discord link, that will be on the YouTube description. And this is the S&P. So this is what I was saying about risk off. This is the 21-day moving average. We're pointing down. Price is below the moving average, and it's looking quite heavy. Sentimentally, we flipped to sell because we weren't positive. If we've gone positive, it tells us that the retail herd are buying on their net long. Okay. If If we go minus, then that's short. So we're teetering back and forth in the S&P. So it's going to be quite difficult for risky, risky assets today. If you're looking at S&P, we're going to fluctuate back and forth, I think. And likewise, S&P just sideways, very choppy. And it can, even though it's making, like, say, a buy now, in an hour's time, it's going to flip flop. So you might get caught out. Perhaps look at technicals when the sentiment is very sideways. Very sideways, but they went long here, but they've held, and that's like making me think it's like we're dealing with apes, not necessarily sheep, because you'd think the sheep would get scared after these declines, but they haven't. They've been adding. See how they added all that time? They added again. They did sell it a little bit, so it came up, and what happens here, we don't know, but if you get a copy of the trading station, you can see. That's really important, because you want to be able to see the sentiment, and you can then understand how it works and the psychology behind the moves. So DAX, you'd think they would exit by breaking that support. You'd think, right? But then that's a good test. Will they? Will they not? And then you can see how it works. You see, and it's very powerful and very empowering to get the trading station, so you can see, like, oh wow, they held on, and then you know who you're dealing with. You're dealing with like apes, sheep, and you can see the psychology of the moves. And basically everything is a flush out and a liquidity probe. So this would look like a liquidity probe to me, but will they hold on? If they do, then there's more liquidity below, right? So that's how it works. There's the caution. That hexagon says caution, okay? There's the sell, because they went long against the moving average. This is caution. Now, I'd imagine they would exit. Like, you'd think, okay, but we are dealing with like a crazy entity. Oh, the apes, the hodl mentality. Gold, so we made a buy. They sold it here. A little bit of a payday for them, and then we went up. Rallied quite hard on Friday, and now it's making a sell here. And I just checked just now, and for the private feed and Discord, and they are going long. After this video, I'm going to do a quick 2-minute video just to cover the indices and gold, and then I'm going to do a quick COT data video as well. So GJ was the largest mover. However, if you look at the chart, it's looking quite strong, and we are fairly close to 50%. I suppose you could argue we're quite undecided, you could probably say, but that was the largest mover. The largest stop loss cluster is AU at the spooky number there, and the size is 4.05. So it's a little bit lower and a little bit smaller than it was on Friday, but still a large liquidity area there, okay? Failure rate is low. I probably want it a bit higher. Pound is currently paying the retail guys, and the Swiss franc is currently paying the retail guys quite a bit. This needs to be higher, really. I'd wait for that to get to 70% before I enter. And don't forget, we've got UK bank holiday, so I don't know how effective this trap mechanic is going to be. The London Open trap mechanic. Whether or not we'll just remain low all day. We could do, and then if so, just maybe stay away potentially. I'm not going to be trading much, I think, today, because it's going to be quite quiet, I believe, because the calendar is, we've got one high severity event on the calendar. NJ short was good. We captured it when it was in plus, but don't forget it's a short. So that was the time where the entry in speech marks, and it did fall a great deal. And we had a 47 pip profit. So this was quite cool, because I tell you why it was a decent short, because we looked at the sentiment and fundamentals. However, a little caveat about Friday being skewy, and the HUD did get smashed as well. But it did pan out, and because the logic of the bubbles, which is the sentiment and the fundamentals, and even though they had a little bit of a payday here, we captured it, because we knew sentimentally and fundamentally it would be a good short. So it reversed, which it should have, and that's how you understand how how FX works. You need to get things to align. You can't just look at the technical. You can't just look at the sentiment. You can't just look at fundamentals. You've got to combine all of the three together. And don't forget, then you've got risk management on top. All right, so once you've got that, you've got like a package and you can deal with that. But I can help you with that. It's not really a problem. Over the week, we had 119 pips. Our worst trade was AU, minus 30 pips. GA was our best one. And we didn't record GU because it said to buy, and we were looking at things and we're like, well, we'll risk off, so this isn't a good buy, and so it's a 0. So hopefully that's clear. I'll like give it a thumbs up or a thumbs down. That was a thumbs down, a GU long. Okay. Technical checks were quite extreme, and dollar Swiss isn't. It's the only one that isn't extreme, and that's the only high risk event. Might move the euro, to be honest, because there's a lack of data today, so it could be focusing on that, and probably all eyes on the Queen's funeral. If you're UK based, that is. If you're not, then it's probably not of interest to you, really. And that's that. So I'm going to do a quick 2-minute video now about the indices, and then I'm going to do a very quick video on the COT data. So I'll speak to you guys soon, and have a good day, and I'll speak to you later.